Whenever you're ready, Jeff.
Okay, we're on. Well, welcome everybody to the National Venture Playing Competition. This is round 2, and this is the 6th topic, FinTech. We've got 9 companies to hear from today, some pretty good ideas to evaluate, and we have a panel of experienced investors from around the country to listen to and evaluate these. I'd like to introduce Philip Schrader, who's one of our sponsors of the event, and I'll let him introduce himself and his business and tell us a little about it.
Yeah, thanks, Jeff. Yeah, it's named Phil Schroeder. I'm with Buckhalter. We're a full-service law firm, and we're happy to be sponsoring the event. Really excited to be involved. Like I said, Buckhalter is a full-service law firm with a regional footprint in the Western U.S. Personally, I'm a corporate transactional attorney, so I handle a lot of venture capital financings and mergers and acquisitions, mostly for emerging companies up to lower middle market.
All right, thank you, Philip. So I think we have our first company teed up. Is that true, JJ?
We have the first company teed up, Ag Tools. We'll start with Ag Tools. I'm sorry, Hope Thrust, we had it in the wrong order, so we will bring you in the alphabetical order. So Ag Tools, please raise your hand. All right, Martha. Okay, Martha, whenever you're ready, you can share your screen, and then you'll be able to also unmute and show your video. Welcome, Andrew. Welcome, Jay. Amit, welcome.
I was so happy that I was number 2 for the first time in my life here. I'm looking forward to change the name of the company, swear to God. I'm going to make it Z Tools.
Instead of AG Tools.
Exactly.
Zag Tools.
Yeah, we'll get Z Tools, which sounds even more interesting, and I don't have to be always called on the first line. I'm always on the first shot.
All right, you have 5 minutes for the pitch and 5-minute Q&A. Phil, are you going to do the Q&A section?
Sorry, I was on mute. Yeah, I'll be keeping track of who's raising hands and who has questions, and then
right.
we'll go from there when we're ready for Q&A.
Thank you. All right, go ahead, Martha. We don't see your screen, by the way.
You don't see my screen?
No, it's kind of blackish.
Ooh, it just went frozen on me. This happened in my past life. It actually freezes, and then I have to reboot, believe it or not, and I am so sorry. It happened in the past because I unplugged the TV screen. Hang in there 1 second. I'll do something, but I might have to go, literally I might have to go number 2, sure. Yeah, it froze. I have to shut down and start again. I'm so sorry.
Do you want us to bring in somebody else and then you go next?
Yes, please. And I'm going to shut down and start again. Thank you.
No problem.
Okay.
All right. Let's see. Who's next? I lost my screen when I emailed John. So let me open up again.
The next one up was Hope Trust.
It should be Bank X, Dow rate.
Is it really?
Okay.
Yep.
Oh,
Yeah, Bank X,
different order
AB.
of mine.
All right. Bank X, raise your hand. Igor. Okay, here we go. Let me change things around. Give me 1 second. I'm trying to remove Martha, but it's not allowing me. So. Yeah, it's kind of weird. It's not allowing me to stop Martha's screen share.
Yeah, you have to give a little time. When somebody that's showing their screen reboots their system, Zoom kind of loses its mind. It'll come back.
Okay, here we go. We're good. All right, Igor, here we go.
Are you going to give us another link?
The link is on the chat. Or...
He just put it in the chat right now. Bank X. All right, Igor, whenever you're ready, please do so. Just one quick question before. Go ahead and share your screen, Igor. If anyone in the chat is a judge, please raise your hand because sometimes you end up there by mistake. So, all right, looks like we're all good. I brought in the 2 that I thought are there. So whenever you're ready, Igor.
Okay, my screen is okay, yeah? You see this? Okay, yeah. Nice to meet you, everybody. So my name is Igor Khmel. I'm CEO co-founder of DAO REIT. It's open banking platform for real estate. So I basically started the company 3 years ago, and DAO REIT, it's a kind of continuation of our evolution and what we did for the last 3 years in digital asset space. So we did, like, as you see, a lot of like pilots over the world in digital asset space, some of them in US, some of them in Japan. And we did tokenization and liquidity platforms for movie production, for fixed, for gold. And right now, I believe there is a moment when we can do this for real estate, and this can be very big and changing the industry. So the problem that we're solving, it's making non-fungible assets fungible, and real estate, it's one of the biggest asset that needs this problem to be solved. The whole market, particularly of the assets that can go to the liquidity and get tokenized, it's like trillions of dollars. And if we say about commissions, then a real estate market that generates 167 billion commissions in the US every year in the real estate broker commissions. So the problem that we're solving, it's decreasing the minimum size of investment in real estate. So right now it's usually like 100K, and then the settlement time, 45 days right now, 43, 45 days, and broker commission, which is 6% right now. So we're looking to decrease this to 1K, to 4 days, and 2%. Our core clients, it's millennials who are looking for zero down payment. It's people who want to avoid foreclosure, and this is like the main kind of problem for the next year. The number of foreclosures already going up, so we're gonna help these people. And finally, reverse mortgage and retired people. So what exactly we do? We connect, we create a structure when we put one title within a trust, get fractional ownership, and provide liquidity either through wholesale banking, so it means refinancing with the bank, or REIT, real estate investment trust, or token issuance, which is a stable coin backed by real estate. And DAO, because it's we enable basically securitization on the one property layer of one property. This is how this solves foreclosure problem. So when somebody owes to bank, we change the bank relationship with home equity relationship, and then the person gets the borrower get time to find a new job and avoid foreclosures and paying for his rent payments, paying to co-tenants with home equity. So we take away the burden of mortgage from a user. This is the business model. So we take 2% equity fee, and this is our major point of revenue, and we change it. So we take also secondary market fee and the rent processing fees. So this explanation how the slicing works. So there is Class A shares. This is central tenant. So somebody who wants really to buy real estate and live there. Class B, it's reserve. So it's to make sure that Class A is over. So there are no equity left. Then Class C investors, passive investors that get paid by Class A equity and then Class B equity. So everything is done in order to Class C investors to be secured that they do not losing money. And we do not take mortgage on the real estate layer, we take mortgage on the Class C layer. So it's more like equity style of mortgage. So this gives much flexibility, decrease the cost for Class A to enter, and makes more flexibility for Class C. This is the legal structure that we are building. It's a broker dealer. Right now we are leveraging
30 seconds.
third-party broker dealers and underwriters and prime brokers. Competition, so Rostock, Point, Fundrise, and Figure. Roadmap, we're raising from 1 to 3 mil right now, and we do a credit line up to 100 mil next year to refinance real estate. Basically financial model, if you have this ask. Yeah, and our team finally. So I'm McKinsey Citadel. We have experienced professors from Del Mar in our team, Peter Cranton. So thank you for your attention. I will be glad to answer questions.
Hey, Gary. Good, how are you?
All right, so just to remind everyone that if you...
Can you mute Tony, JJ?
Yeah, I just did.
Right.
Just to remind everyone, raise your hands as soon as the Q&A, the presentation is done. And then Phil Schroeder is going to basically make sure that everyone's the opportunity. For the presenters, if you go over your time presentation, it will take away from your Q&A. So we will add 30 seconds because I just took away 30 seconds from that. Go ahead, Phil.
Okay, yeah, thanks, JJ, and thanks, Igor, for the presentation. Looks like we got a couple questions. Don, it looks like you were up first.
I have two quick questions. One, you lost me on two places. One, talk again about when you're delinquent, what you do and how that doesn't become a delinquency or how the payment gets made out of equity or something. You lost me on that one.
Mm-hmm. Yeah, so when there is preferred closure situation, preferred closure with banks, so we negotiate with banks and pay the loan back, pay down the loan with discount. And
where do those funds come from?
The funds coming from real estate fund that we're raising also. So we're raising both.
But you just take additional funds to pay down the loan.
Yeah.
Okay, and what was the reference that you didn't take a mortgage on the property? I didn't quite understand that one either.
So we deleveraging properties, yeah. So we slicing this and we take Class C shares, so it's a passive investors. So if it used to be like 60% mortgage, then right now it's 60% equity Class C, and then investors of Class C shares, they're gonna take leverage just for the shares. So not the mortgage for the whole property, but only to leverage for the Class C shares.
Is there any mortgage holder at all?
No.
There's no mortgage on the property.
There are no mortgage on the property. There is Class C shares leveraging, so it's like on the leverage. So it's the same way as you leverage money when you put trade on the public market. So you take a leverage based on the shares.
But what is the bank is just making an unsecured loan then?
The loan secured, it's secured by shares.
What's behind the shares? The property?
The participation on LLC, yeah, the property units.
But the property isn't securing it, it's just an asset that's there. It's an unsecured loan to the LLC.
It's secured by shares of LLC, and shares can be liquidated on the secondary market, like from margin call situation.
Okay,
yeah.
Thank you.
All right, you're just being questioned by a former bank CEO only. So there you go.
Great, and then Benton, I think you had a question as well.
Yes, I'm trying to understand the model as well. How is this different than the DST model, Delaware Statutory Trust for 1031s?
Yeah. Exactly. DST model is used in order to uproot shares to the public exchange. So in the future, we want to have a publicly traded open traded public real estate investment trust, and use the DST model to uproot shares to this trust, to the REIT. So it's one of the biggest liquidity source for us. So we want to connect private and public markets through DST.
Okay. On your marketing plan, how are you going to market to three very distinct segments, from young home buyers who are being foreclosed on and reverse mortgages?
So yeah, we want to build a platform itself, and you know, like eBay is a platform, and all other people do business there, like small businesses. So the same here, we want to build like an ecosystem platform, and other people do businesses for these segments. So we will start obviously do this ourselves at the beginning, and right now our clients is some pre-foreclosures and some flippers. So people who are raising money to flip real estate. So, but on the long term, we want other people to do business on our platform for these segments.
Great. Gerard, you have a question?
Yeah, am I open here? Yeah, okay. I'm very confused about what I as an investor invest in. Do I get a commingled interest in the fund? Do I get fractional parts of specific properties? What exactly as an investor in the REIT am I investing in?
Mm-hmm. Yeah, so we're getting, let me show you this thing. This is the unit economy for one house in San Jose, yeah, where I'm right now. And so you are getting equity in the property, yeah, and you are getting paid with rent payment. So if you own 10% of the property, you're eligible for 10% of the monthly rent payment. And rent payment we take from a third-party data source like Zillow or like CoreLogic. So so it means that you get paid according to Zillow data. And if you, so you're getting either monthly cash, or you're getting, if the cash is not paid, you're getting more equity. So the equity. And then you can exit from the secondary market any moment you want. So you can sell your equity in this house to somebody else.
How do you underwrite the original investment? I'm totally unclear about how you raise sufficient capital on any deal.
We underwrite original investors investment at the beginning. Right now, we are raising a real estate investment trust or real estate fund to take this on balance sheet, on our balance sheet, the whole Series C shares, and then sell them on the secondary market to accredited investors. So it's the model. I'm not the first one who made this model. This model is done by, for instance, Raleigh Road in Art Space in New York. They have a warehouse where they buy all the collectibles and rare cars, and then every Friday they do issuance IPO to their users, so they can participate on the secondary market in these issuances. So yeah, potential advisor right now, Franklin, my advisors, it's former head of real estate practice in Franklin Templeton. So he's helping me right now to raise this fund.
Robert, you have a question?
Thank you. I think the time is up. I don't think we have time for one more question.
So time is up. So please evaluate, if you're able to evaluate the company. And Robert, you can ask the question while we're evaluating and transitioning.
Thank you. My question is, if I'm a Class C shareholder, am I buying into one home or one market or 1,000 homes? Well, which is it?
So on the granular, on the one property layer, you're buying just one property, sharing the one property, like a co-tenant. Like, so you own the share in one property, but you can invest in portfolio. So you can invest in many properties, or you can invest in the fund that invests on our platform. So
what happens if you get no investors on a home?
It means that we'll take this on our balance sheet. So
okay.
Yeah.
Thank you.
All right, thank you very much. We are out of time, Tony, sorry. We're gonna bring on Adrian, FinCom. Are you ready, Adrian?
Thank you.
All right. So Martha from Actool still has not been able to come back. We're working with her behind the scenes to bring her back in. So we'll see what happens. Okay, Adrian, whenever you're ready, you can share your screen, get started. And Stephen has put the link in the chat for the judges to click on the link to evaluate.
Hey guys, can you hear me okay?
Yes.
Yes.
Okay, great. Sorry, let me get this thing set up and then I'll pop in front of the camera. Okay. Hey, I'll just go ahead and start right off. So, hi, my name is Adrian. I invented the spam cache algorithm to address the root cause of spam, economic incentives. FinCom will license this spam filter for the Internet of Things. The RoboCache app was made to show spam cache's effectiveness in a topical subject, phone spam. Our goal is to stop malicious spam in all personal communication while normalizing the fact that you should be paid for your data. We just got a utility patent for spam cache. We took inspiration from Google and their first patented algorithm. Everyone has a smartphone, so consumers are always available to receive messages and be fooled by malicious scammers who want to catch them at their most vulnerable moments. As humanity and technology expand, so does the market size of potential fraud victims. That means our patented IoT spam filter will become increasingly valuable over time. Phone spam sucks. 20 years of laws and apps have not stopped yearly spam records. Today's solutions don't address the root cause. They use boring things like spam detection and blacklist databases. Technology is an infinite cat and mouse game. Malicious spammers find ways to beat these techniques because they steal $10 billion a year. The FCC fines spammers $200 million, but only collects $7,000. Businesses suffer from lost productivity and get marked as false positive. Our laws are unenforceable and our tech is ineffective. At FinCom, we address the root cause of spam with a refundable paywall. RoboCache attaches a digital wallet to your phone number and sends all non-contact calls straight to voicemail. If a non-contact wants to call you, they can deposit 5 cents into your digital wallet. Your phone will ring. If you answer and the phone call lasts more than 25 seconds, the caller gets a full refund. But if you answer and don't like what you're hearing, hang up before 25 seconds and you'll keep their deposit. RoboCache gives you financial control over your phone and lets you immediately punish bad callers. We live or die by the network effect. We will leverage a long-term supply and demand problem to help legit businesses pay consumers via our platform while we take a 30% cut. Each person that joined our network is one more phone number that will never answer untrusted calls again. This reduces the supply of prospects, which hurts good and bad businesses that use outbound cold contact in their sales channel. Long-term, this will increase demand for these phone numbers. This pain will drive adoption of our patented business method, which lets call centers and market research firms directly pay the consumer for qualitative data instead of paying advertisers for quantitative data. The consumer decides their paywall rate and what their minimum toll rate per minute is. Our test showed that consumers are 100% more likely to answer cash calls versus cold calls. However, voice providers are under pressure to meet legal deadlines. Our main focus is to license spam cache to mobile virtual network operators and telecom for robocall mitigation that is 10 times more effective than industry standard with cashback features that no one else can provide. Meanwhile, we raise consumer awareness through our apps. We project $100 million in revenue for 2026. There are 7 local MVNOs who make $380 million in telephony revenue per year. The wireless telecom industry gets $80 billion in revenue. Our secondary vertical will use our APIs. Here, our TAM is $2 billion, but in order to better serve this segment, we focus on our primary vertical first. Our gross profit margins are 80%. Our backend tech is our most important asset, used in every vertical and can work over the top of today's telecom infrastructure to work for landline. The front-end apps are low overhead, cheap to maintain. Our Android app has been live for 2 months and iOS is coming. Our nano cashback feature keeps churn rates low because even a fractional amount of cashback lets us leverage the consumer psychology of being paid and feeling good. We focus on the most spam US consumers located in the Southeast who get 50 spam calls per month. 1,000 early adopters creates a viral effect, helping us get industry brand awareness and shortening our B2B sales cycle. Our B2B GTM has strong outsourced help. Unlike our competitors, we made a spam filter that instantly pays our user for every single unwanted call. Additionally, we help customers increase response rate through FinTech enhanced messaging, all with the lowest possible cost overhead. We operate in a blend of sectors that we call financial communication. We're not experts in any of these individual fields, but in that blend, we're the industry pioneer. We're also living rent-free in Evo Nexus for a year. This is my team. My IP strategy advisor, Peter, had 3 major exits worth $300 million in the last 10 years. I'm seeking an experienced co-founder to strengthen my team. Acquisitions in our space are happening more often. Apple is thinking right, but they need one critical feature that we own: how to let trusted contact through a blind filter. Our cashback IP solved this problem and fits perfectly with Apple's consumer mindset. The market rewards blockchain-enhanced business models, and major players are embracing this space. Cybersecurity is crucial. The FCC has legal deadline. There's an increase in awareness in the public for data privacy and ownership. We're in the right time, right place right now. And finally, our app is a $600K save for a 12-month runway. You get 25% discount and a $3 million cap. With that, we get 5 customers and 250K MAU. Scan the QR code, try out the app. If you're on iOS, find our website and sign up to be notified when that's ready. Thank you.
Thanks, Adrian. This is Phil Schroeder. Looks like we got a couple questions here. First one from Robert.
Thank you, Adrian. My question is how is this different than an Apple phone where I can just put the setting on Do Not Disturb and the only calls I'm going to get are in my contacts?
Yeah, you block out, you destroy the concept of a phone when you do that. What we do is enable that blind filter that you have that ignores all unknown calls. We enable good unknown calls to pass that because they have to leave 5 cents or whatever you decide. It might be $1 that you decide is your paywall rate. They have to give you that first, and then they can bypass that filter. And if you talk to them for longer than 25 seconds, they get a full refund. But if you don't
why would I want that call? Because if it was a good call, they're going to leave a voicemail and I can call them back.
Certainly. Yeah.
Thank you.
Tony, next question. Tony, you're on mute. Tony, are you? It looks like you might be on.
Yeah, there we go. You got me now. I'm sorry. I apologize. Adrian, quick question. Can you please explain your exit strategy? I'm looking at your deck right now online, and I don't quite understand what you're trying to convey in your exit strategy deck. Your slide.
Yeah, I think that you might have an older version of that. Here, what we're trying to convey is that there are just acquisitions and integrations being done, and really, because we have this unique algorithm that we patented that can reinvent the data economy, we feel like we have something special here, something that people will want, because phone spam is just the first instance. You also get spam in your LinkedIn, in your Instagram, your Twitter, anything with direct messaging. Our spam filter can work, and this is the bigger Internet of Things picture. So we have a lot of different sectors that we can go after, and an exit. We can talk pricing if the right price is there, but we just really want to build with what we have right now.
Okay, so you're not looking to go IPO. You just want to get acquired in 3 to 5 years.
No. Ideally, we would like to go IPO. Thank you for clearing that up. Ideally, we would like to go with IPO, yeah, because it's just such a new sector that we're in, and no one's really operating in it.
Okay, thank you.
Thank you.
Great. Get another question from Jeff.
Hi, Adrian. How long does it take the caller to set up the call compared to just a normal dial out to initiate the call? And also, what happens when users just start using it as a way to try to, profit off of people they kind of know, but they just don't decide to take their call?
So once we get the backend set up, which is probably an integration of 1 to 2 days or so to get the backend set up for them, there's one central wallet. Now, keep in mind, I'm talking if we were operating at, say, a call center where you have 80 people making phone calls. All we need is one central wallet that all of these phone numbers tie to. So setting up that backend would take 1 to 2 days. And from there, it's just the same. You're just making phone calls. You're not doing anything special. We've automated it so that every outbound phone call you make automatically start paying that person whatever you've decided. So, you know, that's how we ran our tests with doing 25 cents a minute, 50 cents a minute, and $1 a minute to consumers. And we found out you pay them 50 cents a minute, they're 100% more likely to pick up. To your second question, that's totally possible. You can do that, but probably you're going to lose a lot of friends doing that. And no one's going to call you anymore, which is kind of the point.
Great. Gerard?
Yeah, help me just explain the case of my Uncle Henry that I haven't heard from in 10 years, who gets my phone number from my brother. How does he even call me? What's the payment mechanism before he even gets through to me? Just walk me through transactionally how that's going to work.
Sure. So when he calls you, you would have the app, he would not. His call would get sent straight to voicemail and you will listen to it and then call him back. If you wanted to, you know, use our system, we have a way for you to opt in to send referral text messages to your uncle. So he would get a text message that said, hey, you got blocked because of RoboCash. Here's a link, sign up. So he would go there, enter his phone number. He would get a 6-digit OTP code, enter that, and then he's in the system. And we have a faucet inside of the app where you click a button and we give you a little bit of money to play with. And we use the Nano blockchain. It's a cryptocurrency that's fee-free, real-time, and scalable. And so with the first-time user, that credit that we give you is worth 5 outbound calls. So he could use the system without actually buying in.
Thank you.
Thank you.
Great. Another question from John.
Yeah. Hey, Adrian. Good to see you again. So it seems like you're leveraging this new co under the model that you've already built for RoboCash. Are these separate entities, or is it a wholly owned subsidiary?
So no, they're the same entity. We're doing a DBA as FinCom. RoboCash Inc. is our legal entity. And FinCom just represents the bigger picture. We didn't want people to pigeonhole us at just a phone call spam filter. We're more than that. So I hope that answers your question.
So that leads me into, so talk to me about your go-to-market. It seems like you're going to be leveraging the RoboCash app to help, you know, and like you just explained to Gerard, you know, people are going to naturally want to join it as you start to hit critical mass. But how do you reach that, you know, how do you reach that I think it was, you know, whatever your percentage of that 700 million SOM?
So with the go-to-market, getting those 1,000 early adopters, we're doing a lot of organic community building right now. One of the advantages of using a known cryptocurrency that's been around for 5 years is you have this natural fanatical community that just wants to talk about the cool apps that use cryptocurrency to everybody. So we have that base of 50,000 natural users. Of course, not all of them are signed up on our app right now. We don't have that many users yet. So that's the initial base. To build that community, we get an email every time someone on Reddit mentions the word spam or robocall, and I just go and talk with them and say, hey, so what are you using? You can use this thing that pays you. So we're building out our community one by one. We're doing things that don't scale right now. And to really get that next jump, I would like to do an equity crowdfund to help get that 1,000 early adopters. You know, if you're invested in the company, you're much more willing to speak about it to other people.
Sure. Thank you.
Thank you.
Great.
Bill, the time is up. We don't have any more time for Q&A.
Okay. Great. Okay. Well, thanks, Adrian.
Thank you, guys. Appreciate it.
Good.
Yeah, everyone evaluate, I guess, while we're evaluating, who had his hand up still? You could still ask a question from Adrian.
I'm ready for any questions.
Yeah, I had one. Quickly, you said you had a patented algorithm. Is that actually true, or do you have patents applied for?
It's 100% true. We got the notice of issuance September 20th. The letters are set to issue on November 11th. And we're adding more on top of that. We're so lucky. We've got everything we asked for and more. We even got the business methods that are going to skyrocket this thing. It's like if Google patented PageRate and then patented.
It's really a method.
Sorry, go ahead.
It's really a method patent. Method for doing whatever it is you do.
I suppose you could say that. I look at it as an algorithm with business methods attached.
Okay.
All right, thank you, Adrian. Jay, thank you.
Appreciate it.
All right, next in line is Grupo AB. All right, William, here we go. All right, whenever you're ready, William, you can share your screen, unmute, and turn on your video. And next in line will be Hope Trust after. And then if Martha came in, we will bring Martha in to present. I still don't see Martha from Actors.
Well, Martha is on the panelist side.
Oh, you moved her to the panel? Okay. Or, yeah, okay. So Martha, you'll be after Hope Trust and after Group AB, okay? All right, go ahead whenever you're ready.
Yes, sir. Welcome and thank you for your time. We have a compelling market opportunity for you today, the capital markets themselves, a Web 3.0 capital market platform. Here's your standard accredited investor legalese. Let's get started. This is a problem worth solving. Think of the network effects of a platform with APIs to every interested party, a regulated marketplace of conventional and alt assets, no peer-to-peer trading. Investors come through their broker-dealer for KYC AML. Think blockchain NYSE to wrap your head around the business quickly. We're not doing an IPO, we're selling Dauntless to a consortium. 100 seats at $100 million each, and we retain seat 101. The masters of the investment banking universe are feverishly seeking alt assets. And what could be better than an alt asset platform that also trades conventional assets? And for a governing seat on their very own global NYSE, $100 million is a trivial number for them. Dauntless is comprised of all 4 pillars of a DLT exchange: security tokens, smart contracts, business networking, and trusted data in 2 flavors, shared and private. Competitors are only doing pieces of the puzzle. They allow direct accounts or peer-to-peer trading, disintermediating the broker-dealer. And broker-dealers and the investors they bring along with them are paramount to a vital market. From Japan to Germany, asset-backed token wave is building, and the US regulatory framework is breaking our way. And so now is the time to build the platform. We're different, remember, blockchain NYSE. And with our last mile solution, we can tokenize any asset, stocks, bonds, commodities, alt assets, digital assets, ensuring that the asset is what the issuer says it is before being tokenized. And trust is paramount. That's why we're using IBM FIPS 140 level 4 HSMs and the Fabric protocol. As a former IBM Global entrepreneur, I've secured access to the IBM Garage when funded. The blockchain garage will allow us to leapfrog development, leveraging IBM experience, including the recent Thai government bond issuance on Fabric. Professor Catalini at MIT, my professor for business of blockchain class, stated in a published working paper that a blockchain marketplace makes capital markets more secure and efficient, expanding the type of transactions we are willing to engage in. Quite simply, trust. Semper Fi Mac, always faithful. The only disintermediation will be the conventional capital markets and high-frequency traders with co-located servers. No more front-running. Again, trust in the market. How do we make money? We start with the NYSE fee schedule, just more competitive. We have AI oracles data mining for marketplace analytics. We earn a float when a bank custodian holds the fiat during token trading or from cash flow of a performing asset on chain. Non-consortium participants pay a nominal fee to SaaS and API dashboard, and of course, consortium-owned IP. We have assets already teed up to be tokenized. We have a Big 4 audit partner, and we have the IBM Garage. And we have a partner-level counsel at Shearman & Sterling, a global legal firm who will form the the Delaware C Corp and work on the transfer agent designation with the SEC. The use of funds is all hands on deck, building out the platform for a live token sale. We hit the IBM Garage running to architect the platform while we hire up. I'll tap my MIT network for technical staff. One of my group of 100 is a leading AI data scientist who just recently started a company for underrepresented AI talent. And what does the live token sale get us? Data and proof to secure the A round of $25 million to add functionality, broker-dealers, issuers, banks, custodians, operators, auditors, and service companies. Issuers bring on new assets which attract more broker-dealers and investors. Then the platform network effects gets us to the B and C rounds. We can even IPO some of your portfolio companies. And then we keep going, adding jurisdictions and asset types. The founders team is 2 people. I'm the CEO and Matt is the chief blockchain architect. And we also have 2 fabric coders, both IEEE published, one on contract and one awaiting funding. Matt has over 20 years dev experience at some very notable companies, and he built an early crypto exchange as a hobby. So he truly lives and breathes coding and development. I look forward to sending monthly progress reports to participating investors. And I welcome your questions. Thank you.
Great, thanks, William. We do have a question here from Tony.
Yes, so I guess just walk me through some of the mechanics of this. Do you see yourself selling the solution to, I mean, let's say a broker dealer buys your solution. How do you, walk me through the mechanics a little bit of.
So the exit is going to a consortium of 100. So it's not going to be one broker dealer or one entity at all.
Okay.
The consortium model is pretty much being standardized for industry groups to work together in the blockchain.
Okay. I didn't see any competition. Where do you see your competition?
So we have competition back. Let's see here. There we go. Here's the competitive landscape. Did I pass by the slide?
Yeah. Well, it wasn't clear, but go ahead.
Okay. So really Securitize in Japan is doing something similar, but and also Fundament in Germany is doing something similar, but they both did it on the Ethereum network. And so they're disintermediating the broker dealers on a public blockchain, which is problematic in a regulated marketplace. Plus the broker dealers have the investors. And that's why Overstock, when they tokenized, even though it was billed as a success, it was a failure because all they had was crypto enthusiasts. We need more than crypto enthusiasts to make a market.
Okay. Thank you.
Yes, sir.
Great. Don, another question?
Yeah, you go back to your last slide that you had that showed the the ask on there. Is the let me get it and then I can. Is the 2 million what you're seeking now, and then later is going to be the Series A of 25?
Yes, sir, exactly. And you know, valuations are you know, all over the board for early startups anyways. And so we wanted to sell 20% of the company, and we needed $2 million to get it done. And so we're looking at a 8 million pre and a 10 million post, giving the investor 20%. Okay, and there's how we're going to use the money.
That was my next question, so you guessed it. Thank you.
Yes, sir.
Any other questions out there?
All right, going once, twice.
Sold.
Gone. Sold. All right, William, thank you so much.
Thank you, JJ. You bet. See you guys later.
Thanks, William.
Soon, thanks.
You bet. Bye-bye.
All right, next in line is the Hope Trust. So please raise your hand and we will in. All right, Amanda.
Hi, JJ.
Yeah, Josh, when it's your turn, just let us know. Sorry, Amanda. We can. You can share your screen and get started.
Okay.
So Josh is with you?
Yeah, he's we split the pitch in half. So if it's possible to allow us both in, that might allow for more seamless.
Yep, he's just brought in.
All right, super. Let me get my screen share up.
Okay, also judges for Hope Trust is in the for you to click on for evaluation.
Okay. You can see our Hope Trust logo now.
Good to go.
Okay, great. This is my brother Liam, and he has autism. Liam is my why, and he is a bright light. He loves Saturday Night Live, any kind of sketch sketch comedy and making people laugh. Liam also has a lot of challenges. Recently, I was at home visiting my family, and Liam had an incident which required the police to come to the house. Ultimately, Liam was taken by ambulance to a local hospital for evaluation. My mom went with him in the ambulance, and 5 minutes after she left, she called asking me to text her a picture of the guardianship paperwork she had in her filing cabinet. She also needed a list of Liam's medications that she had saved on her laptop and asked me to text her a picture of the physical pill bottle to check the dosage details. I was happy to do this for her, but what if I hadn't been home? With the ambulance sitting in their driveway, my parents didn't have the time nor the bandwidth to gather this information. I share this personal story to give you a sense of the kinds of families that make up our total addressable market of 32 million American families. For these families, our loved one with special needs is the first thing we think about when we wake up and the last thing when we go to sleep. Every day is filled with fear, uncertainty, and worry. Because while my parents might take care of Liam now, we don't know what tomorrow holds. And my parents are always worrying, who will take over when I'm gone? How will they know what to do? How much money do I need? And where do I even start? Hope Trust solves these questions with our 3 tiers of service: plan, navigate, and manage. Plan is our fully tech-based service that allows families to create a dynamic life care plan. Navigate is our vision for a concierge-based platform of services to lessen the daily load on families like mine. And manage is our opportunity to step in as trustee of a special needs trust, either on our own or in partnership with a corporate or family trustee. Simply put, Hope Trust is my family's framework to plan for the future. With Hope Trust, our family can build a life care plan and lay out who will take care of Liam and guide them on how we want him to be cared for in detail: diagnoses, medications, personality traits, preferences, and more. We can also generate a special needs trust with Hope Trust proprietary trust funding calculator, and we can accurately predict the money my parents will need to save to ensure Liam is taken care of for the rest of his life. The Hope Trust portal provides our family with a dynamic system that can be updated and accessed 24/7, 365, and connects our circle of support from family members and financial advisors to medical professionals and attorneys in one central place. My parents can permission tailored access to an unlimited number of users, ensuring that everyone is always on the same page. Finally, going back to the personal story I shared earlier, my mom could have accessed the document vault from her phone while she was on her way to the hospital with Liam, and the guardianship paperwork and medications would have been available to her with one touch. Hope Trust allows our family to not only plan for the future, but also tackle the everyday challenges we face. Simply put, Hope Trust allows our family to wake up feeling more secure and go to sleep with more peace of mind.
Our business model is B2B2C, and our B2B partnership opportunities are vast. Hope Trust can serve as a plug-and-play solution depending on the partner's specific needs, and the end goal is always the same: connecting the circle of support for families like ours and bringing together the professionals that are typically siloed. In so doing, we streamline planning for our clients and might make life a little bit easier for families affected by special needs. Our B2B partners are in asset management, insurance, law, and accounting, to name a few. To strengthen our partnerships, we have a custom insurance policy that indemnifies our partners against the actions of Hope Trust. Our technology is standalone, and data is owned by the end user families, making integration with our B2B partners easy and efficient. The cost is also typically borne by the end user family, so there's no added cost for our partners to integrate or distribute. We break even at only 35 clients a month, assuming clients opt for our 2 least expensive service tiers. And that doesn't take into account additional revenue sources, such as commission sharing from our life insurance partners, who use the technology to quantify and place appropriate policies. In Q4, we're starting to onboard, so now we're starting to onboard our 60 B2B partners that we have in our sales pipeline. Our release candidate software is ready, and patents have been filed.
30 seconds.
Patents have been filed, and trademarks are pending. We have strong relationships with the New Jersey Economic Development Authority, so all of our investors see a 20% return on capital invested from the state of New Jersey. We recently completed the 1871 BMO Harris Accelerator Program, and were recently named one of the most fundable companies in Pepperdine's Most Fundable Companies competition, one of 20 companies out of 4,500. We have a phenomenal leadership team that's interdisciplinary, nimble, and experienced, and look forward to taking your questions.
Great, thanks Amanda and Joshua. We do have a couple questions. First one from Tony.
Yes, so I see the big picture on this application. My question is, do you see yourselves integrated in with current existing family office applications out there?
Integrated with the technology or with the office?
How do you fit in? How do you fit in with existing family office technology out there?
Family office technology. So we're standalone from the technology, and that's been kind of a hard-learned lesson. Integrating with technology has been a very difficult thing for our platform because we carry healthcare data that most financial service companies and financial technology companies don't want to house. So by being freestanding, we eliminate that risk. There are plenty of integration points where we can pass data through various APIs to those services if needed. But we've been built as a freestanding structure such that there's no data about healthcare or finances that's on another partner's technology platform that they may not want to be housing.
So is there overlapping features?
Exactly, there's some overlap, and those integration points can all be handled through our API where we can set up appropriate webhooks and structures to send whatever data is needed to the right platforms.
So once the HIPAA, I'm sorry, I'm asking more questions. One last question. So if the HIPAA stuff is handled properly, you could integrate in with other family office technology. The reason why I ask is because you don't want a financial advisor out there, seeing this. I get it. Okay, thank you.
Great, thanks, Tony. Another question from Gerard.
Yeah, can you help me with the go-to-market strategy here? Will you be, let's say in the first 12 months, is this going to be targeted at independent financial advisors? And if so, what's the cost of customer acquisition versus what you can pull down from revenue? Give me a sense of the economics.
Okay, yeah, absolutely.
It's a great idea. I struggle with how you're actually going to get it out to the Bs, who in turn will sell it to the Cs.
It's a really good question. So we've spent the past 2 years building the technology, but our CEO is the former president of PNC Bank, who's had tremendous access in the banking, trust, and investment management space. We have a pipeline of 60 partners. We're talking life insurance companies, investment managers, RIAs, lawyers who need this solution in their practice because they're unable currently to holistically plan for their special needs clients. So there is no cost to the B2B partner to have this solution available to them. The cost is generally borne by the family and is roughly $2,000 for the creation of the care plan or about $3,000 for the care plan and the trust. So the B2B partners are very happy to adopt because it really costs them nothing at all. And they become a part of our referral network and an interdisciplinary platform. And any cost is borne by the end user client who needs to be putting this type of planning in place.
Thank you.
Yeah.
Great. Max, you have a question?
Yeah. First of all, I love the double bottom line and I love the why. 3 quick questions. What's the cap on the note?
There isn't one currently because this is a new round and our lead investor will be setting the cap rate.
Got it. And why is the CEO not pitching? You got 2 people pitching who are not the CEO.
Because our CEO was otherwise occupied today and this was a last minute ad for us. But yeah.
Third question, exit strategy.
Exit strategy. So a couple of opportunities. We've had early discussions along that route, though we're not there yet, with some large national life insurance investment management firms. Think life insurance companies that also have large annuity or investment management platforms. Also, some of the large national technology platforms or wirehouses have also expressed interest once we evolve a little bit further. But the exit strategy roughly is probably a 3 to 5 year acquisition period.
Great, thank you very much.
Yep.
Great, we got another question from John.
Yeah, hey, real quick. Is it annual, monthly, quarterly business model subscription?
One-time fee, small monthly trailer.
Okay.
So for the pure tech piece. That's right.
Great. And then have you experienced, I see you've raised money previously. Have we experienced any traction to date?
Traction to date with adoption from B2B partners, though they have been waiting on us for a full rollout. Part of the complexity of the platform, because it's interdisciplinary, has been building some of the training mechanisms and interdisciplinary pieces where life insurance people are cross-trained on how to work in the special needs space. That's now all completed, and revenue will be just at the end of this year.
Great, thank you.
Yep.
Great, and then Jeff?
Yes, Amanda and Joshua. Ostensibly, this is in the cloud. You're mixing together identification, health information, financial information, visual copies of signatures. It's all out there. You guarantee that nobody will ever get hacked, right?
I would love to do that. What we've done, it's a complicated answer. We are not technically a HIPAA covered entity because we're not the creators of the data, but we follow HIPAA standards. So we're on AWS HIPAA compliant servers. We're using Cognito, we're using multi-factor authentication. We have schema separation between personally identifiable information, any PCI information, and any health information. So we've done everything that is reasonable. If somebody makes their password their home phone number, I mean, we try to do everything we can with encryption, but everything's encrypted at rest. Everything's encrypted in transit. We have insurance for cybercrime. There's a lot here, but I think we've taken the appropriate steps.
Great. I don't see any more hands up, but are there any more questions out there?
Time, Stephen? What's the time?
The time is up.
Time's up. Okay. All right. Well,
I have one last question. One last question. Where are you in your current fundraising at this point?
We are in the midst of our seed round, so we have $1.5 million seed round open, and it is half subscribed.
That's what I thought. Okay.
Thank you very much.
All right. Thank you, Joshua.
Thanks, Joshua. Jeff, do you want to manage the hands for the questions for the next couple?
Yeah, I'd be happy to. And JJ, were we planning in a bio break anywhere in the middle?
Yeah, the bio break goes now because we did, let's see, 1, 2, 3, 4. Yeah, so we can do a bio break now, 5 minutes. So 5 minutes after the hour. All right, we'll be back. Don't disappear, come back. David, how are you?
I'm doing fine. I'm just trying to think through if any of these are really investable in my mind. I think my scores have been the lowest of any of the groups so far in general.
Everybody's listening, remember, so.
And JJ, can you, for us to finish our scoring on an individual one, if we're ready to submit, do we go to the upper left and put final or what?
No, you don't touch anything, just stars.
Okay,
you don't need to do.
Keep everything open and then wait until we're done, and then we do a group.
Anything except the stars, that's it. It's automatically.
I didn't hear the last word, sorry, it's what?
I said just put the star, you don't have to click save, final, or anything. That's all you need to do.
Okay, so wherever I leave this when I close out, you will pull it in. Is that what you're saying?
Yeah, it automatically goes in.
Okay, it closes. Okay, that's all I wanted to know. I didn't know if there was a submit button.
I know, actually, that's a confusing. I had the question asked by many people, but yeah, it is confusing. No submit. What
does it mean in the upper left then, where it says finalized and in progress?
So the application is finalized.
Okay, I get it. Okay, thank you. I just wanted to make sure I understood.
No, that's good.
Hey, JJ, I've gone on chat and, I've looked at the, all the different ones. And when I click on them, they come up and it says no permissions. All I have is a blank page. So I've gone back, I use an Apple platform. I've gone back and I've given it all the permissions to allow and everything, and I'm still getting the same thing.
No, that's something on our side. So I'll add up to you. Give me one second. I thought you've logged in before. Any permissions? I don't remember. Hold on. While we're doing the break, I can look that up. So.
Okay, I mean, I've been rating them in my own head here and writing them down, but I'm sure it's not going to help with everything else.
Yeah, you could, if you have a link to rubric, and yeah, here we go. I see you, John. Yeah, you haven't logged in before, so I'm gonna send you an invite right now, and then just after you see the invite, you just need to create an account, and then after you create the account, I will provide you with the permissions. All right, so I'm sending you the email right now. Yeah. Just accept the invitation, and then I'll set you up with the permissions.
So you just join now?
Yeah, so click on join.
Okay.
Martha, if you're ready to go, you want to share your screen, Martha?
Yes, yes, sir.
All right, let me see. Use your email, John, not your. Don't use like one of the social media stuff. So log in.
Yeah, you know, I did that and I already put in a password before. And then I was getting that no permissions.
Yeah, just log in again. It should work.
Okay, well, let me see. I'll try.
All right, let's see if everybody's back. All right, we'll get started in about 30 seconds, Martha. Okay, we have the link in the chat that Stephen just posted. So whenever you click on it, you'll be able to go to the evaluation page. All right, Martha, whenever you're ready.
Okay, well, good morning, all of you, ladies and one lady and a gentleman. Ag Tools, real-time data for the ag and food supply chain global challenge. So the problem and the challenge across the world is the agriculture. You walk into a supermarket and you have fruits and vegetables from all over the world, literally, and that's the challenge. And then the reality is that the farmers across the world and locally, even across the street, don't have any data, and they have to actually harvest without any data, knowing how the market behaves. But it's not just the farmers, it is also the whole food supply chain, all the way from bottom all the way to the suppliers, to the buyers, I'm sorry. And so we are addressing that. We're going to the food supply chain and making sure that all of them are going to be able to have the data, because the common denominator is a thin margin across everybody on the supply chain. So since last time that some of you have seen us, we used to have the data not only on the phones, on the reports, on the TV screens, even on the floor screens. We also have now a product that plugs the data of our data against the data of the companies, the corporations, so they can see real time how the market is behaving against their own buying patterns. We're called the Bloomberg of the industry and the routers, and the more we get into it, the more that we're even pushing into that data. Here's the tool in action. So we have 515 commodities already in the system. We have over 27 years of historical data. As you can see, it moves really fast because it has it moves 1 billion transactions per second, and by January 1st, it will be 1 trillion transactions per second, making it fast and easy to understand. And then we have weather pattern over the last 50 years. Why are we addressing ACTUS? Because ACTUS takes 76 variables and put them in the system and start thinking for the user how to manage their crop better. Let me make sure that you know that we are focused on specifically for the specialty crop. Everybody thinks ag, everybody thinks wheat and grain, but it is really the fastest growing segment, and COVID-19 not only has proven it, is really now the largest one. And we now know that USA, which is our first market, is 116 billion by 2025. And obviously the 3 countries that are the pack of the North America are our second focus. But we take data from all over government entities across the world and United States. We put them within our Apex, which now it's a new logo because it's really the brain behind the brain, collects the data, creates the algorithms, we put the systems, the knowledge, and that's where we come up with what we have like a Bloomberg of the industry. This is a very important drawing because it's important for all of you to know that the architecture was built for any commodity. And now that we are gotten into Cargill, the conversation is, can we put pork cuts? Can we put with one of our now customers, food bag, can we do bakery? Yes, we can do them, but we need to make sure we rinse and repeat. So it's the same architecture for different commodities across. We have paying customers across, and we keep growing. Today I'm excited. We just landed the Boston Consulting Group as one of our first customers that we're looking into the financing industries. And they are recurring. Word competition, again, literally the competition is word of mouth, people talking to each other. There's no data in the system across the world. We have paying customers, and you can see our ongoing customers and our retention. And definitely who are behind it, myself and 2 brothers. And this is crucial because we have been hearing now from customers, it's so refreshing to have people who understand the industry and also the technologies that can change and do things faster than going into the SAPs of the world, the Oracles or the Microsofts. All of us, amazing background, but you want to know where we are today. We launched the 2 tools that I mentioned. We're certified with the California Public Utility, which is giving us a lot of insight in corporate America. We have raised the money that you see there. We're in Techstars Farms to Fork, which is giving access to amazing customers that we're now developing as we go. We are Microsoft already on the marketplace. We are working on all our sales through their channels, and we are going to be filing patents in the next couple of weeks. We have our first meeting with Panasonic IdeaShip Fund, which is owned partly by Panasonic. We have our first meeting to go over everything we have to see what do we patent locally, worldwide, and what parts do we patent. Our market, as you see, is a large one, but we're focused on farmers and retailers. And then we provide some really good value for the customers. And we're not looking just at the exit, we're looking at partnership strategies as the market mature. Thank you. ACTUS, see more and achieve more.
Okay, thank you very much, Martha. Good job being on time. We're going to go to questions, and judges, please keep your questions short. Ask 1 question. If you have another one, please just raise your hand and get back in the line. And presenter, please keep your answers as short as possible so we can get in as many as we can. Don, you're up first.
Who is your customer and how do they use the data?
The customers are the farmers, operations like the Greenways or the Driscolls of the world. who sees the data and what's going on in the market and react with it, and specifically now even more than ever, but also the buyers on the other side, the retailers, the food service companies, because they can see, they can forecast, and they can react to the market. Those are the two extremes. But like the Boston Consulting, they just
Well,
bought the
how
whole.
is the farmer using it?
They get in the morning at 4 o'clock in the morning, they see a report, they see what has happened in the last 4 years on their commodity, and they see that it's kind of okay. They see that there's something unusual. The prices are $40 versus $30 last year. They click into the tool, and now they see that there is a shortage, there is a tracking issue. So they're able to now move faster to react on whether they should ship or not, whether there's a storm in Boston, they shouldn't be shipping the product to Boston because they'll never make it.
Thank you. But they can only see it if they get up at 4 in the morning.
Oh, yes. 4 a.m. in the morning, there's a report.
Okay, Max.
Martha, great pitch. Tell me about use of proceeds, please.
The use of proceeds is definitely technology, support of technology of the large companies. And we have to be very careful how we manage this because when you get large companies, $4 billion companies, $25 billion companies, you kind of start being absorbed by those companies and not do the rinse and repeat that we should be doing. And so we're very careful about the fact that we do the proceed. We need technologies and IT teams. We need a sales team supporting. And more important, we need customer expansion. So it's good to have many customers, but it's better to have more customers and going deep with them. And then definitely going after the patents. That was one of the proceeds. So those are the three main focus: technology, sales, support, and retention, and then patents.
Thank you very much.
Okay, Benton, your hand just went down. Do you still have the question?
I'm sure I can make one up. I was going to ask about the IP strategy. So Martha, clearly you're early to market. You have domain expertise in the team, both technically and with farming. What other competitive advantages do you have?
And actually on the IP, Benton, because this is crucial for all of us. It took me literally a year to get ideaship.fund.com. I mean, as an investor into the company with all of you, because the Japanese, I've known the Japanese for a long time. Panasonic is known for worldwide understanding patents, and having 8 Japanese engineers going and working with us, not us by ourselves, into this whole patent, so we have enough fencing around us. It was crucial, and it took me literally a year to get them, and they're approved only for companies a year. We got in. And so besides the fact that we'll have the patents, and besides that we have the knowledge of the industry, is first to market. We're now mentored by Mr. Cargill himself, Richard Cargill, and he is really all over it because he knows that he has 17 divisions just from Cargill that can use the tool. And we understand the phenological phases of plants against market. So much so that even corn, which are the leaders in the world of corn, we're going to start working on the corn for Mexico because we understand all the phases. The world has created a lot of bloomers of the world based on Wall Street, but not based on nature. And that's what we're doing.
How are we doing on time, Stephen?
One more minute.
One more minute. Got another minute. Anybody got a question?
Yeah, I've got one. What's the deal, Martha? What's the deal for investors?
So the deal for investors right now, we already fundraised for the seed round. We're looking into whether we go into Series A, and regardless if we go or not, I'm preparing the company for Series A, mainly because by thinking Series A, we're
So I like this. Yeah, just shorter answers. So are you looking for any more seed money? Yes or no?
No. We're looking for Series A. If we do.
Do you have any idea how much you're going to raise and what the deal will be for investors?
We're looking for potentially 20 million.
Thank you.
And we're getting the calls by large funds. That's why we're walking that path.
I'm not surprised. Congratulations.
Okay, very good. Thank you.
All right. Thank you, Martha. A good presentation. Best of luck. Thanks.
Thank you.
All right. Do we have a line here? Next in line would be Invesco. Please raise your hand. Okay, judges, the link is in the chat for Invesco. Kurt, you could share your screen.
I'm clicking on things. Can you hear me? Oh, there I am.
There you go. All right.
That's a good thing. Okay, so that's my screen. So what I'll do here is I'll focus here on my beginning slide.
No, we don't see your screen. You still need to share your screen. If you move it
all right.
to the
How do
bottom,
I share?
there's a big green share screen button. If you hover towards the bottom of the page.
So
do you see?
Do you see? Hit share screen, enter full screen.
Yeah, so you can click on that, and then you can share either the window or your entire screen.
Well, I just hit share screen.
Okay.
And it says enter full screen when a participant shares. Maximize zoom window. Scale to fit. Side by side. I'm hitting advanced. Enable.
So click on one of them. Something will work. Because you haven't shared, so at least select your screen. Do you have your PowerPoint presentation up?
Yes.
Okay, so when you click share screen, one of the options should be at the PowerPoint presentation window to be shared.
Well, okay. Mine isn't in PowerPoint, it's in Word, but it's on my screen.
Matter. Yeah. It doesn't matter.
Kurt, make sure to share your screen in the Zoom application, not in your PowerPoint application or Word application. Within the Zoom.
I'm in this. I'm looking at the Zoom webinar page, and I'm looking at the whole page, and it says speaker view, and now I went to there's a gallery view and a speaker view. I've got muted participant. What? Down at the bottom is a share screen. Does that help?
That's the one.
So now I want to share the slides. There we go. Look at that. Maybe that's it. Hey,
you got it.
Did that do it? Okay, terrific.
Yep.
So the reason for this slide is I want you all to know that I'm not FinTech. I applied to Clean Tech, but JJ's computer said FinTech, so here I am. So we'll go down. I'll go down up here. And there we go. Okay, I'm getting slowly under control. What you'll see today: introduction to my company, Invesco LLC, the problem, solution, market, go-to strategy, why I'm unique, the team, and the business plan, 3 years to $1 million. Introduction: I founded this in '78 to pioneer new technology, and one of the first was an invisible screen that I invented, but it'd been invented in 1886, so I didn't do that. Then I invented Snap and Send, the first commercially available webcam software used on USPS. In 1915, I learned about an Australian hybrid rooftop ventilator, and that's why we're here. So what's the problem? The problem is that the United States rooftop ventilation design has been the same since 1942. Every rooftop uses a crude box on top for rain. Cook was smart enough to put a little radius so the air could get out a little easier. But the fact is that the Australians came up with the best solution in the world. And so when I saw the Edmunds hybrid, I realized it was perfect for us. And I improved on their design to build the Invisco hybrid tornado, because wind accelerates the flow, unlike those old rain hats, and I can combine a motor in it. So what's the market? Commercial and industrial buildings. There are 77,000 buildings based on statistics back in 12. The other market is residential rooftop mounted whole house fans. No one has ever had a high performance rooftop before in history. Almost 700,000 homes in New Mexico, most with no attics, almost 1 million mid-century modern homes all over the US. This home at the bottom is my first customer in 2016 who bought one for his mid-century modern home. What's the market? The market is for commercial industrial buildings. I'm taking a very small percentage. 10% of that at one per roof at $4,000 would result in $338 million in sales if I actually got 10% share. What's the sanity check? There are dozens of companies serving this market, and the biggest ones, Greeneck and Lauren Cook, are over 300 million in sales now. Residential rooftop, about 1.7 homes with no attic, 10% of that at $2,000 per system is 340 million. A sanity check, Quiet Cool, who's the leader, is doing about 50 million with no rooftops. What's the go-to strategy? There are sales rep firms in every state. I've already signed reps in several states. ASHRA is the top association for building professionals. ACEC is the top association for building engineers, and I've already joined the California chapters and affiliates, so I get access to thousands of building engineers. Email is the easiest way to reach them, and I have thousands of emails I use now. Yearly ASHRA trade show is the hottest place to be, and I've attended it before and met with some of the top people looking for license deals. And then there are monthly meetings in every major city. So in addition to that, what happens with the residential rooftop? There are dealers and installers of whole house fans all over the United States. Big box stores like Home Depot have them for sale all the time.
30 seconds.
Tractor Supply has agreed to start carrying my fans in their stores in 2021, which took a long time to get there. There's a mid-century modern home magazine called Atomic Ranch that's perfect for advertising, and the New Mexico homes are easily identified on Zillow using very inexpensive help. So what's unique? How's the time, JJ?
4 seconds.
4 seconds. Well, let's get to the important part. Team, I've got James Shui, who's a registered ME.
Time is up.
Business plan, $1.8 million.
Okay, thank you very much, Kurt. Again, when we ask questions, please try to keep your answers as short as possible so we can get in as many as we can. Judges, please, one question at a time. Max, you're first.
Kurt, I'm in the people business, and as an investor, we bet on the jockey. I have no idea who you are other than you said you started this business. My math is right, 42 years ago. So tell me a little bit why I should bet on you.
Well, the experts say that if you study something for 5 years, you're an expert. And I've been doing this for 10. I started a whole house fan business in 08. I am a serial inventor. You can see me on kurtschafer.com, which is my personal website. You can see many, many inventions that I have. And I've been at this since 08. I've had this design since 15. I've proven that it works. I have a design with the city of Los Angeles that was out for bid the beginning of this year worth $23,000 with a total profit of the $13,000 out of that. And that's in my business plan. And that's this 23,453 you see sales in year one.
I got it. Just one quick follow-up question. How much of your own cash have you invested in this business?
At least $100,000.
Thank you.
Philip, you're next.
Yeah, hi, Kurt. Yeah, I just had one quick question. I was wondering if you're able to get any patent protection for this design.
That was on one of the slides I missed. I have a patent applied for. It has not been formalized. It was actually challenged. We're back at them. I'm working with a patent attorney in Ohio, and I've studied the last patents they showed me as potential problems, and we are now working around those because they do not directly apply to what I've done.
Okay, Gerard.
Hi, just a friendly suggestion more than a question. It has to do with the name Invisco. And so since this is a FinTech group, you should know that when I first put your company name up on Google, I got 13 pages of the large mutual fund company Invesco. And then today when I put it in, I got another company with the same name that's involved with red light stuff. I just want you to be cautioned that you may have a trade name problem and you ought to take a look at it. So no question, just a heads up.
Well, can I comment?
Sure.
Sure.
Well, the answer is I've had Invisco for decades, and it's easily confused with Invesco. And if you Google Invisco LLC, you'll get to my llc.com. I have Invisco all over the internet. If you Google Kurt Schaefer, you'll find I am almost the only Kurt Schaefer in pictures on Google because I've been around the internet now since 1995 when I invented my first webcam software. So I am so public, you can learn everything about me, for better or worse.
Thank you. Stephen, time?
A minute and 30 seconds.
Okay.
Okay, any last questions?
Thank you for your time.
All right, thanks, Gert. Much appreciated.
Thank you. Goodbye.
All right, next in line is Payment C. Please raise your hand. Gary, here we go. All right, Gary, whenever you're ready, you can share your screen and your video and unmute. Payment C link is in the chat. Whenever you're ready, Gary, we'll start the clock when you start speaking. You should probably.
I unmuted.
Yep, there you go.
All
We
right.
can hear you now.
Well, thank you all for letting me give an introduction to Payment C. Payment C is in the, it's going to be nothing less than a new ecosystem for banking and merchant payments. I've been in banking since 1971, so it's legitimate that I'm an extreme experience in this domain. Of course, in those days, we had paper and adding machines. 1994, I launched internet banking when I was at La Jolla Bank. And so that was one of the pioneering efforts, and actually the hardest one I had to do. I had to go to the UCSD Supercomputer Center. 2000, I launched Bank of Internet. Today, it's known as Axos Bank. They changed their name in 2018. And now we're going to do Payment C in 2021. The banking industry is interesting. You know, we sit with people, Capital One, Reimagine Banking. You all probably saw the commercials. Well, they've been running that commercial since the late 90s. You know, they see Capital One branches in a bank, in a coffee shop. We see Starbucks as a bank. That's the difference. Back in 1994, when I launched Bank of Internet, B of I, at La Jolla Bank, Amazon launched as well. And I can tell you at that point in time, there wasn't a person in the world that thought retail could outperform a bank. Banks are digital to start with. And that was an opportunity I took advantage of. So we will use the power of retail for banking going forward. We're going to turn retail into the new banking networks. I'm glad there's a banker in the meeting also. So we provide banking services, but we won't get a bank charter. We couldn't do this with a bank charter. Too many rules. We're not doing anything crazy, but we had to go back and pull data from the 1800s to find a way to do it. So we're going to have a new payment network, text for the unbanked, merchant apps for everybody else. We're building a clearinghouse. We're building a marketplace platform for consumers, all consumer focused. We have a hybrid blockchain clearinghouse. That really is our secret sauce. I think if you look around, the last clearinghouse was NACHA in 1974. 1853, the banks cleared for paper checks and cash at that point in time. Our model is powerful. The savings, we're removing the middlemen to give a better deal to the consumers and the merchants. This is an example of a restaurant up in LA, real numbers. They calculated their costs. It was 3.10%. They would be saving, 127,000, 18,000 in our case. Everyone makes money with paymency. Consumers are always free. Merchants save up to 90% of card fees. We have a unique twist. We have sponsor merchants that are the big merchants. In this example, I'm demoing Costco and Target and everybody else. The sponsor merchants do the best. The sponsor merchants, one day you will be able to go into Costco and open an account that you can use for payments and get all the rewards and benefits of a merchant app, and you'll be able to hold your money there for payments. Not a big deal for everyone here, but we can all take advantage of the best part of our spending money. So we're not here to do every banking service. We're here to hold the money and do the payments. And we'll launch with the unbanked because that has great value and it's good for our business to start there. In this example, I can't quite see it, but I know that, in every case, we make 10 cents. You notice that when Costco, in our example, the customers spend money at Costco, they just pay 10 cents. If they spend, Costco customers then go spend money at Target, Costco will earn a penny, and if they send it at any other merchants, they earn 2 cents. They will make money. They will hold money. Today, Costco.
30 seconds.
30 seconds, okay. Costco today, Starbucks today holds about $1.8 billion in cash. We would be making in the neighborhood of $100 million a year if you look at the mechanics in the deck I gave you. And at the same time, with that one example, Starbucks will make on their side $5 million in fees. So they'll save money and they'll make money. We're going to launch, train, coordinate, and develop. We're going out after consumers first. We're going to go after a potential successor for me. We've got to bring them in. I'm not a kid anymore. So we want to bring some people in I can train. And we'll start by solving the unbanked problem, as I said. We enroll cities and we'll be selling to the merchants, the retailers, at the same time. And we're raising $15 million. Thank you very much.
Thank you, Gary. Looks like
Yes.
Mike has the first question.
Great.
Okay, yeah, so great enthusiasm.
I love this. I'm the luckiest guy in the world to be in this business.
Yeah, so you're lucky. You didn't talk about, well, two things.
Yes.
I have no idea how the money moves around. You didn't
Sure.
describe that at all. And you've got a ton of competition. So,
Well, actually, the money moves on our network. We don't have competition. At low cost, look at the low cost we have.
so
We're going to
okay,
be talking about saving that much.
slow down. So how does the
Yeah.
money settle? How does Costco get money from their bank into your system? How do I get money into my bank account from your system?
It'll be part of our blockchain network. will interface just as everyone else does. It's just we're creating the network in this case. We will be similar to, but not the same as ACH or the Fed system. The network's out there. We can be part of it. We will have nodes on our blockchain that will be various banks. Not every bank, but a lot of the banks. And that's how we'll be moving the money. When Costa opens an account, if their bank wants to participate, and I think they will, we'll interface with their bank. Our database becomes the new database for the payment network. In fact, that's where I stand on all this. When you look at it, I studied architecture and engineering a bit when I was way younger. And in that situation, what we have today, we have the plans for the house or the building, and we have a foundation poured, and we will launch within about 30 days to 60 days and have our product at cities. It's ready to go. Our text-based product, ready to go.
Gary,
Yes.
try to keep them a little shorter so we can get in more questions. Max, you're next.
Gary, I'm confused. You're raising $15 million, which is not an angel deal, it's a VC deal.
Yes.
Have you two questions, quick questions. How much of your own cash you put into this?
I'm the only investor to date, and I have about $100,000, probably a little bit more, plus the time I've spent in the development.
I got it. You got $100,000 in.
Yes.
And you haven't raised any money, and now you're going to a $15 million A?
Yes, what we're building here is a bank, and this is not for everybody.
Gary, I just need short answers. And what's the deal for investors?
The deal for investors is the large investor that puts some money in will set the deal.
Thank you.
Don, did you want to jump in or keep your hand down?
Mike and Max both covered exactly what I wanted to.
Great.
Very good. How about Gerard?
Yeah, what does it mean start enrolling cities? Are you thinking about this for fines, forfeitures, or property taxes, or what's your target?
What we want to do is have, if you are familiar with what they're doing in Africa, they're using text for payments. We want to reach the unbanked and the homeless through the cities, but we'll make it easy for them. This is a payment network and a banking system.
So you're trying to get indigents into the network. Is that the idea?
Yes, and they've actually started to do it. If you look in Oakland, California, you'll find where they used to offer a prepaid card, but it was too expensive and they cut it off.
Thank you.
There's a demand, there's a need.
Okay, Tony.
Gary, quick question. What are you doing in terms of patents? How are you preventing, say, the credit card companies from doing this?
Oh, credit card companies can do it and everyone else can do it, but do they want to cut their fees that much? I mean, we're talking about taking a fee that, you know, in that example I had, 127,000 to 18,000. So they could do it. Others could do it, but they're all going to be cutting their own throat. They hate cannibalization in the banking world. And they've been protected by their oligopoly.
Okay, so you have no patent.
We have some that are planned, but they're not in place. They're not even drafted up.
Okay, thank you.
Yep.
Okay, any other questions? None? Okay, Gary, so you want to lead the race to the bottom on price. I suppose if you actually start getting any traction, others will start to move to match, and they've already got a lot more customers. So how are you going to stay ahead of them on price?
But they're charging the merchants. We're going to go to the merchants. They're issuing the account. Merchant customer exchange failed. We picked it up when they failed. They failed for a good reason. We can get into a ton of it, but not now. So we're going to be there, and we're going to lead to the bottom, except we're going to make 2 to 6 times more than Visa. You know, I love it. It's the right kind. We're removing the middleman. You know, so every merchant complains about card fees.
Sure. I've been one, I know. Gerard?
Yeah, it's great.
Jeff, the time is up.
Gerard, you got the last question.
Okay.
Yeah, back on the finances. Instead of raising 15 million, what kind of cash requirements do you have in 6 months that you could fund with a seed round, or is that simply not feasible? I don't understand where
Yeah.
this money goes in terms of development, why you need to raise 15.
Right. Well, it's probably my habit of starting banks over my career. What we're doing is very big with all the people we're going to launch and start selling to. So in this situation, I do have an alternative plan because I wanted for $1.5 million, where I could get the thing started, start going just after cities and getting that launched. But I want to work on the bigger plan, and our opportunity is to have sales teams out selling to the major merchants and helping them enroll their customers. Imagine going to Costco, how easy it would be for them to become your bank. They already got all your data.
All right, Gary,
They'll love
thank you so
saving.
much. Thank you, Gary.
Hey, thank you all.
Judges, please evaluate while we're transitioning. Thanks, Gary.
Great, I'll get out now.
All right, next company, Virtual Pay. Raise your hand, please. All right, Brad, here we go. Okay, while Brad is setting up, the link is in the chat for Virtual Pay. Brad, yeah, please share your screen whenever you're ready.
Okay. So do you guys already have, when we were doing all of this, we were submitting a pitch deck and a business plan, correct? So you've already seen my pitch deck? Or do you want to see the pitch deck?
It's whatever you want to present today. It's up to you.
What I made to present for you guys today is just a demo of what the app looks like in the store. Essentially, we the app is called Virtual Pay. We hope to add what's called the smart credit card to it. The app is basically a payment method. Like it, we're anticipating obviously a large change in FinTech. China and India are already all mobile payment, unless they're using cash. So we're trying to keep our features open in that we can basically stay competitive and adjust to whatever payment methods become the next big payment method. Originally, we started off as just an app that's looking to work with and essentially a credit card. And this credit card will have a solar panel that will have a Bluetooth receiver and receive your network location. So your IP address on your mobile network is always changing. So we figured creating a VPN for each and every transaction would be the best way to keep businesses from storing, large sets of, credit card numbers, and there's a breach and now 10 million credit cards are now leaked. And so they, our idea is to mask obviously that credit card number from the store. And once that happens, your transaction request will be sent through their network to your smartphone, where your smartphone holds your standard credit card numbers that Visa or MasterCard or Discover will issue their customer. So we are essentially using our current network location on our 4G network just to create patterns that change. So in the smart credit card, the card number itself contains your IP address of where you're attempting to process your transaction, and whatever other numbers come, whatever the other information you need. You actually don't even need a name. All you need is a null value. So we are using this app to calculate the IP address and change these values. So whatever credit card number you enter will not match what is generated. And this is the original idea. So there's two different ways you can mask these credit card numbers. You can have a static credit card in which the credit card has a fake credit card number of some IPv4 address that you have purchased. You can purchase them for $10. You set up just a dummy program just to locate where these, you can estimate based with, simple APIs what IP addresses are located in what areas. So you can just basically just make sure that the IP address of whatever your current mobile network is and the IP address of whatever is in the TCP packets of what the request from the vendor is being sent. And you can see if those two values are close to each other. And if they are, then we can probably assume that that person owns that credit card being swiped at that machine. We also want to, obviously, if you lose your credit card, you call the credit card company immediately and it's canceled. So the idea is convenience. Originally, our business plan was to try to prevent fraud altogether, but we wanted to collect, as Visa and MasterCard do, a percentage from each transaction. Well, we're finding now that Apple and Google are both releasing their own version of this. We're seeing that you can't force these customers to use a credit card. In fact, it's culturally ingrained to use credit cards in the US. So we just essentially want to keep the options open. We want to make sure that the customer is comfortable with what they're paying with, that they're able to pay in every single whatever methods are accepted. Currently in Colorado, the four that I can name are Whole Foods does QR, Target does, King Soopers does QR, Target does barcode.
30 seconds.
Excuse me, sorry.
30 seconds.
Okay, so so we're just trying to mask these credit card numbers and create just a credit card that will receive and change network locations in order to mask your credit card numbers, and that's and verify where your smartphone is in comparison to where it's where you're trying to make a transaction happen. So that is our product. So we are Virtual Lifesavers, and the Instagram is Virtual Pay App. Feel free to check them out.
Thank you, Brad. Robert, do you have a question?
Yes, thank you, Jeff. So Brad, this sounds like Google and Apple Pay, but slightly different. So how is it that you would get customers? I understand how Google and Apple Pay can get customers. Can you describe your go-to-market strategy, please?
Yes. So originally, before COVID, let's start with that. The idea was that we would reach customers simply through just normal promotional methods, but it's kind of a battle between who is willing to implement the technology and how many people want to use it. Like the vendors, they have to pay for the Google Pay technology. So we were thinking that doing a freemium model in which I don't collect the data. It's a decentralized SQL database. So there's everyone's credit card number is stored in a 100% secure locally stored database. So we don't collect any of their credit card information. So we could advertise to them based on where they're making purchases, but we don't take their credit card numbers. We can just collect information such as where that transaction took place, what how much was spent, what kind of things they're buying, etc. So I was thinking of more of a freemium model would be actually an excellent idea. People don't necessarily want to buy security, but they need it. They don't know they need it until there's a problem, and then someone else takes care of it for them. Well, we can prevent the fraud before it ever happens. So that is.
Thanks, Brad. Let's get in another question. John, you're next.
Yeah. Hey, Brad. Real quick, what are you looking for, investment wise? What's your ask?
We haven't raised any money besides just bootstrapping and my own personal assets that I've put into it. My mom has put probably around 10 grand into it, just helping me develop the app. I wrote all the code from scratch. The entire the entire architecture and everything is completely on me. So I'm looking for a seed round of around $100,000 and a Series A or Series A of $1 million and maybe
Is
a
that
pre-seed.
evaluation like 409A or anything, or I would assume you're going to let your lead investor set that?
Yeah, I've read online not to just present experienced investors with just a bunch of phony numbers that you just came up with. You know, it's better to let a person with experience evaluate what you have and that you know present the evaluation that they see, you know, is what you have. And so yeah,
Great, I love it. Thank you.
Thank you so much. I appreciate that so much. Thank you.
All right, great. Any other questions?
And I was also going to put the link to the app in the chat. Is that something that you guys would mind if I did?
Sure, that's fine.
I'm also, so a few of the companies presented were also talking about their placement. And so if you look in the Google Play Store and you search virtual pay, I'm the fourth or third one down. So you'll find me on what's considered the first page of your app search. You know, it's like page 1 of Google. I'm on page 1 of the Google App Store, if that makes sense. Just for that search. That just
how many
for
downloads, Brad?
What's that?
How many downloads so far, Brad?
Only a few. I released
downloaded?
a month ago. I've been building this app for the past 2 years. I've applied to 300 or more firms. I've had Excel partners, Google Ventures, Sequoia, Lightspeed Ventures. You know, a lot of these firms like reach out to me and communicate and check out my LinkedIn, and they all have. I've reached out to as many investors as I could find. Finding the angel investors is more difficult, but I've reached out to most of the popular VCs for sure.
Okay.
All right, Brad. Thank you very much.
I don't see any
Good
other
presentation.
Thank you,
Thank
guys.
you.
Thank
All
you.
right. All right. Last but not least, Zeiger. Jules, whenever you're ready, you can get started. And in the chat, there is the link for Zeiger. Jules, I've asked you to unmute. There you go. And share your screen. Yeah. Jules, we can see you. Go ahead and talk to see if you can hear you.
Can you hear me now?
We can hear you now.
Okay, good. And I suppose, but you can't see my screen yet? Sorry?
We can see your screen.
Oh, sorry. Then let me start from the beginning. Hi, good afternoon. I'm Jules Stanowitz. I'm the Managing Director of Zeiger Capital Management. We thank you for inviting us to make the presentation. Unlike Martha, the bane of having a company that starts with Z is that you're all too often the last. You get the privilege of going last. Hopefully we'll make it worth your while. I'd like to start with a bit of perspective. We've all seen the movie, the enormous and aptly named RMS Titanic. Yet here's a shot of it compared to today's cruise ship. I like to think of this as a proxy for the investing market, which has grown to almost unimaginable size over time. Some lessons have been learned. There's plenty of lifeboats now, but even in today's gigantic market, there's a problem lurking. With all the money that's sloshing around in the markets, the reality is that the number of stocks available for investing has shrunk by 45% over the last 20 years. Mergers, bankruptcies, leverage buyouts all continue to shrink the investable universe, and diversification gets harder and harder. This week alone, there's been over a dozen transactions announced, shrinking it even further. But investors still behave as if nothing has changed. Second part of the problem, it comes from the markets themselves. But everyone pretends to know what they're doing, but the fact of the matter is that only about 20% of what the market does is significant. The other 80% is noise. And so how do you, with this shrinking market and all the noise, how do you get real diversification? Well, Zeiger Capital Management is a specialized quantitative investment manager. What we do is that we diversify portfolios by lowering the risk and providing a completely different source of investment returns. Because we use the markets outside of the shrinking equity markets, we're not into the problem of having too much money chasing too few opportunities. We actually have demonstrably different returns, which provides superior diversification because it's highly automated and it concentrates on the commodity markets using the futures. The market itself, we've shown how big it is, but the fact of the matter is that the market's measured in trillions. It goes from a lot of different things. The biggest are the pensions, endowments, the foundations, but there's also a lot of money from multi-asset funds, high net worth individuals. But unlike a lot of people who've come out with things recently, you may have even seen a few of them in front of you, like Robinhood, democratizing the market for the retail. We are not targeting the retail market whatsoever. Our competitors, frankly, most managers use only stocks and bonds, so their competition to us is only tangential. In the actual thing of what we do, which is called a commodity trading advisor, there's 200 firms that have a presence in our specialty. None have our proprietary approach to the markets. So our primary competition, as we see it, is the investor's lack of awareness and understanding of our value as a diversifier. The revenue model that we work under is very interesting because we get a monthly management fee of annualized of around 1 to 2% annually. But more interesting than that is the quarterly incentive fee. We actually share the profits that we make for clients. While that's not as stable and predictable, it can be much, much larger than the regular fee. Under that, a modest level can generate enormous rates of return to the firm. And the costs themselves are mostly, the marginal cost of any new revenue is almost zero. So we expect profitability to be achieved in approximately 12 to 18 months. Now, the management team's well-rounded. The eponymous Enrique Zeiger, he is the founder and namesake. He's in charge of proprietary algorithms and the ongoing research. His background comes from theoretical physics, and that's reflected in the rigorous scientific basis of the trading system. Bob Kreuter is in charge of the operational functions of trading. He has a long background in the financial field and has provided the firm with the ability to immediately implement trading as well as to expand it as we go forward in the future. I've joined the firm to be responsible for business development and sales and marketing.
30 seconds.
2-1 half-court shot. The execution plan, products ready now. We plan to target relatively small institutions, larger institutions as the firm grows, third-party distribution if and when warranted. Our summary is very simple. We diversify portfolios because we lower the risk and we provide a different source of return. This also works on your level because our business is very different from everybody we've seen today, probably the other 60 people you've already seen as well. We are not trying to reinvent the world. We are not trying to reinvent a new industry. We just have a very good way of making a lot of money very soon and for a long period of time. The product's ready. Clients need this. And we invite you to join us in making portfolios safer for investors. Thank you very much.
Okay, Jules, Chair's prerogative. I'm going to ask the first question. You've referred vaguely to these other sources of returns. I'm assuming other asset classes. You've mentioned something about futures and commodities. Are we talking corn, wheat, something else, gold?
The corn, wheat, gold, all the above. We generally concentrate on the commodity markets themselves. So specifically, it's going to be gold. It's going to be all the precious metals. It's going to be all of the base metals, agricultural commodities, soft commodities. Energy is a very big market as well, with crude oil, natural gas. And each and every one of these has a different economic driver than does the stock market. I mean, you guys have seen the stock market concentrate on 5, 6, 10 names. It's great if you're in them, but other than that, when they turn around, as we saw even in the beginning of the year, when things turn around, everything turns around at once. And that's where the diversification is
and remember,
hard to find.
Remember to try to keep answers short. Tony, a question from you?
Jules, thank you. Very interesting presentation. My question is, I see this as a search for alpha, right? You're in a search for alpha for your portfolio construction. So exactly what is it that you're looking for from investors here? I mean, it looks like you just want to expand out your clientele.
Yeah, sorry. I mean, a 5-minute presentation, I could have probably done 15 more slides. So one of the ones that I ex post realized they didn't have anything about what we're looking for. We're actually looking for 750,000 to $1.5 million, depending on how much the commitment wants to be. And that's to build out primarily sales and marketing effort, upgrade internal systems, and to expand and make sure that regulatory and compliance is in full order, because that's very important in our business as well.
Okay, thank you.
Thank you. Don?
I'm not understanding how your diversification strategy is different from other firms that are out there in the marketplace doing commodities, doing other things, using that diversification word a great deal. So help me understand what makes your process so unique.
Our process is based on a couple of relatively simple things that generally people don't use. Most commodity managers that are out there buy commodities, and usually they have what is their understanding. An oil trader will open an oil firm. An agricultural trader, as we saw with Martha, will concentrate on ags. We are not. We are not experts in any one thing because we are automated, quantitative, and we are also short or long. So we can make money from markets going down as well as up. So our return stream looks very, very different. We have absolutely zero correlation to even the commodity markets, interestingly enough, because of the methodology that we use.
Mike, you're next.
Yeah, so in the hedge fund world, you're called a CTA. Is that correct?
Correct. That's the registration.
So why did you say that? I mean, that's a commonly known.
Because Mike, I'm glad you know it, and I'd love to see the number of hands if I said we're a CTA. Mike and who else would have been able to raise the hand?
This is what you're doing is you're allocating across various asset classes. You have an algorithms. You're looking for mispricings, and you've got a ton of well-established competition there, big names in the hedge fund space. That I just don't know how you're going to crack into it, especially in the institutional world. Who is this Zeiger guy? I never heard of him. Does he have a name in the business?
His background is he developed the trading algorithm. I don't know if JJ, if you can click him in to be able to answer. I mean, I don't know. He's on the call, I'm sure, but the fact of the matter is that he came from a background of like I said, theoretical physics, and was actually doing modeling for oil companies. And that's how he developed into the pricing algorithm that's used. So from that standpoint, it's, there's been various different times that the asset level has been, it fluctuates as it always does. And the main reason that looking for this is that, frankly, the trading and the
So let me stop you here. You got a little bit of time here. So in marketing this, you have to show people a track record.
Right.
Does he have an investable track record that you could show people?
Yes.
With money in it other than his own money, or what kind of money is involved there?
Yes. Current asset level, currently there aren't client assets, but the fact that there's been as high as $50 million in the program.
All right,
so, Ziegler, Zeigler is in. If you want to unmute and answer the question, that would help.
Let's move on to Ray.
Yeah, I just had a quick question. Thanks for your presentation. You indicated that your biggest impediment wasn't the competition, but was the lack of education about how this category of assets is out here and how it offers additional diversification. And yet I didn't hear you address how you plan to overcome that impediment. So, you know, if that's your biggest impediment, what are you directing toward that issue?
What will be directed towards that issue is the marketing full program that has never been undertaken by the firm in its past. In other words, the asset level got to 50 million through both track record, but also word of mouth. But word of mouth works both ways. And quite frankly, the interesting thing is, Mike, you know what CTAs are, then you probably know very well that CTAs are also used as the ATM of investment world, because hedge funds and everybody else lock their clients into once a year, or if they're really nice, once a quarter for the liquidity. CTAs, you can get your money out anytime. So it's 100% liquidity. And that's what you see when things happen in other areas, in hedge funds or others, where they can't get their money out. That's when they take their money out, regardless of what the performance is, Zeiger Capital Management. And that's been our, that's been our experience in terms of the asset ups and downs over the course of years.
Gerard.
Jeff, the time is up.
Quick question. You've been around since something like 2003, over 15 years. You talk about being up to 50 million, but now you don't have money. Is there a story here about why this hasn't already become a successful business after that many years of having a chance to fine tune the product?
Yes, frankly, it's been a lack of proper marketing and a lack of proper, lack of a proper placement in the market. And that's what this, that's what most of the money raise is going to be going towards. And we believe that that's what's there. I mean, I have not, I'm a recent add to Zeiger Capital Management. I've not been around with them. I've known them actually from the other side when I worked in, on the distribution side at one of the New York brokerage firms. We actually did business with them in the past. That's how I know the quality of what they do, but they've not spent the time and effort and money at the marketing like they should. And,
okay, so help me why there hasn't been a placement agent doing that for you, which is no capital outlay and could have grown the business?
Because we have found that the placement agents that are no capital outlay and have no skin in the game generally they've not been very effective whatsoever.
Thank you.
All right, we'll let Tony ask the last question, although time's up, but this is the last presenter. So Tony, go for it.
Jules, one more question. So the investor that you're looking for right now, what will they become? Will they become, a managing partner of Zeiger Capital Management? Or how is this investor going to exit?
Twofold. One, we envision this to be, like I said, we envision this to be to get to profitability, meaning no longer using the capital that's raised in 12 to 18 months. Thereafter, depending on asset level, there's a number of different ways of exit, whether it's buyout from the firm at a predetermined price, or what's more frequent on firms like Zeiger Capital Management is if you get to the critical mass, large investment firms, other hedge funds, or banks or brokerage firms tend to buy and take these types of firms in-house. And if that exit event happens, then that's what the investor will get.
All right. Well, thank you very much, Jules. Judges, yesterday, one of the judges asked if we could stick around for a few minutes to discuss it after we asked the attendees to leave. If any of you would like to stay around, we only tried it yesterday. I wasn't, I didn't dare to do that before because, because of the length of time, but everybody truly enjoyed it yesterday. So it's an option. will probably be around maybe 10, 15 minutes if anybody wants to stay to discuss the companies. Attendees, please leave so we're able to discuss your companies without you being around. Otherwise, I will just remove you one by one. So please check out. Stephen, can you stop the recording as well?